Let's go to Oliver Sloup at Blue Line Futures and say hello to him today. Oliver, thank you very much for joining us. Good to have you on the program. First of all, while we're here on the topic of the livestock, let's talk about this hog market. What a rally today. It took a little bit to get here, but if you look at a chart, it almost looks like the soybean chart did a week ago, just parabolic higher.
Parabolic, pigs can fly. We found that out here recently. We've been pretty optimistic on the livestock market, really at the end of last year and beginning of this year. And you've heard us say the back of our thesis really being fund participation ramping up in the livestock markets. And we've seen that in the live cattle and lean hog markets, and we expect that to continue going forward. But I would like to see a little bit of consolidation back towards that $80 handle for that April lean hog contract. I think anything that goes straight up doesn't really end well. So I want to see kind of more of a slow and steady climb to make this a sustainable rally going forward, kind of like what we're seeing in the live cattle. It's more slow and steady, consolidating a little bit right now after bumping up against last year's contract highs, 124.5 for that April contract. And I'd be really looking for a little bit more of a pullback towards 121.25 to 121.80. This is a breakout point from January 22nd. Became support February 1st and represents a 50-day moving average. I think at that point, it represents pretty good value. You had mentioned some of the deferred contracts. We continue to like those as well, specifically August down at 118, all the way down to 116. And again, with that thesis that the funds are going to continue to build positions in these livestock markets, similar to what they've done in the grains.
Oh, I'm glad that you bring up the grains, because one of the questions I wanted to ask you is we've got the USDA's Ag Outlook Forum that's coming up. I understand this year it's going to be virtual, but how much of an effect will that and the information that comes from that have on these markets? Or probably better question is, how much has it affected the markets in the past?
Well, there are a lot of moving parts in these grain markets right now, and we're seeing that play out in the volatility. The implied volatility is through the roof, and if you look at this week's trading range, today alone, I think we're trading about a 20-cent range for corn. Through this week, we've seen an average trading range for that March corn contract of about 23 cents. So a lot of waffling back and forth and kind of a tug of war between the bulls and the bears here going forward. I wouldn't be surprised to see a little bit more pressure if we're not able to really sustain momentum in today's session, knowing that we have a 3-day weekend ahead of us, as well as March options expiration. But as you know, we're getting to that time of year where acres and potential weather disruptions are going to be a bigger and bigger issue here in the States going forward.
Well, that's a good point. Final question then. This dollar's been pretty quiet. Any play over here?
You know, the dollar's been sold off pretty darn good over the last year or so. It's trying to carve out a little bit of a bottom. I wouldn't be surprised to see us kind of consolidate in the sideways trade. If the U.S. dollar does continue to firm up a little bit more here in the coming weeks to the coming months, I wouldn't be surprised to see that add a little bit more of a headwind to some of these commodity markets, specifically wheat. That tends to be the grain that has a little bit higher correlation. So if the dollar does firm up over time, I think that's a headwind for Chicago wheat, which is in a bearish head and shoulders pattern as it is.
Yep. All right. I tell you what, Oliver, thank you very much for the analysis on this. Come back tonight for our real evening news, and we'll talk more then about the day's activity and get your thoughts then. There is the latest, and now back to you, Tammy.